This week, retirees are living longer with less. Will this drive more homeowners to consider a reverse mortgage? And is the reverse mortgage marketplace finally turning the corner? We'll address this and more right after this short message from our sponsor.
Liberty Reverse wants to help you grow your reverse mortgage business with our proprietary Equity IQ product suite. Equity IQ gives your borrowers access to more funds, lowers their upfront costs, and expands eligibility for home purchases. Learn more at partners.libertyreversemortgage.com today. This ad is intended for mortgage professionals only and is not a consumer solicitation. PHH Mortgage, doing business as Liberty Reverse Mortgage, is an equal housing lender. NMLS number 2726.
Welcome back, and thank you for joining us. A recent Realtor.com column notes that a growing number of older Americans are borrowing against their homes using a once controversial loan product that's gone through some major changes since it dominated the headlines a decade ago. Now, of course, those controversial loans are the reverse mortgage or the HECM. Now, the column does observe that HECM endorsements increased by 6.25% in the fiscal year 2025, which led me to ask just how many of these were first-time HECM borrowers. Analyzing data from HUD's HECM snapshot reports spanning from October 2024 through June 2025, we can measure the actual growth of HECM loan volume. And what I found is that while overall endorsement volumes did increase year over year, 11% of those transactions were refinances of existing HECMs. Yet, as we noted in last week's show, without knowing the exact number of private or proprietary reverse mortgages that are sold, it's going to be difficult to measure the overall reverse mortgage market growth or demand by comparing the number of units sold. We just don't have that data. Now, against that backdrop, Realtor.com notes that Grandview Research, a U.S.-based market research firm and consulting firm, projects a steady increase in global reverse mortgage demand, surging from $1.83 billion in 2023 to $2.7 billion by 2030. The firm also expects reverse mortgage loan volumes on the North American continent to grow at a compounded annual growth rate of 5.9% during those same years. Now, that doesn't account for any potential future changes to the HECM program, which we've seen in the past, or fluctuations in home values or even prevailing interest rates. However, one thing is certain: an increasing percentage of older homeowners are in a financially precarious situation. Last month, the National Council on Aging cited findings from the Elder Index, and it found that 80% of older households are unable to weather a major financial shock, such as a serious illness, the loss of a spouse, or the need for long-term care. And that would signal that the needs-based borrower will continue to represent a significant portion of HECM demand. Cyril Edelman, Executive Vice President of Policy and Programs at the National Community Stabilization Trust, told Realtor.com, "What we're currently seeing are reverse mortgage volumes normalize a bit, now that interest rates have slightly dipped." However, proprietary loans are making inroads into the mass-affluent marketplace. Many lenders are now increasingly attracting younger and wealthier homeowners than they did just a few short years ago. New View Advisors reports that in the first 9 months of this year, proprietary loans totaled $1.8 billion, or 40% of overall reverse mortgage dollar volume, with HECMs accounting for approximately $3 billion. And that's heartening as our industry is continuing to move the public's perception of reverse mortgages from a life preserver for the desperate senior homeowner to a strategic financial tool that increases flexibility and liquidity to weather the uncertainties of retirement. So while the headlines may be focusing on loan volume, the real story lies in the direction that our industry does take. Now, more seniors need options. More affluent households are exploring liquidity tools. The question is, can we scale up our distribution channels to serve more retirees and increase market share? What are your thoughts? Leave those in the comment section below. And if you would share this week's video on your LinkedIn profile, we certainly appreciate that. We do have a YouTube channel where you can subscribe. That way you never miss any of our upcoming episodes. And each and every week, we bring you the most recent reverse mortgage news that we curate just for you in our weekly podcast, HECM World Weekly. You can listen or watch. Listeners can subscribe and listen at Apple Music or Spotify. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you only find right here at HECM World. Have a great week.